right, we are live. Let me know
We
when
live?
you see it. Yeah,
Okay.
checking to see if it's.
Let's see if it's on.
Welcome everyone to Bookworm Investment Club.
Hey.
Welcome to another investor chats with Dr. Marsha, our creator and founder of Bookworm Investment Club, and
Nakia,
Nakia, yes.
aka Beauty Cut Right.
AKA Beauty Cut Right. And I'm also one of her team members. So
Yep.
we are here to talk about something I think that was highly requested. It was a highly,
It was.
it's just we need to know about the basics of investing.
Okay.
And this question was asked a lot. Go ahead.
Hold on. I'm trying to switch it over to comments.
Oh,
so I can see. And it's not
giving you.
It's staying on private chat. And I had it on comments last time.
Oh, click it up to it.
Okay, maybe you might have to do the comments because I don't know.
Okay, I will do that.
Okay.
Let's see. GV says hello. Michelle Jones.
Oh, see?
Nancy Adams. Oh, we gotta see what's going on. You should be able to see everything. Let's do this. Oh, we're good.
Always something. Let's see. Chat. Uh-oh. Did I do that?
Nope, that's me.
Oh.
We're having fun.
Okay, well, you know what? It's not my comment section is not working.
Okay. So what we'll do is I'll put them up for you to be able to see.
Okay.
So if people have questions.
Okay, good.
And we have a few coming in saying hello. So we're saying hello back.
So, hey, everybody. I can't see your comments. So Nakia is going to be relaying the comments to me so I can see them. Mm-hmm. This is highly unusual. It usually works. So, welcome. And I'm glad to have, we're glad to have you here for our Wednesday night investor chat. As Nakia was saying earlier, we had quite a few requests for this particular topic that we're going to talk about tonight. And that is, how the heck do I pick some stocks? So we are going to get started with that topic. Mm-hmm. And I hear some music in the background. Is that
me?
Mm-hmm.
I have music in the background.
Oh, okay. Yeah. All right. Well, if it doesn't bother anybody else, it doesn't bother me.
Let me know if it does.
Okay. So I'm going to go over two ways that you can actually start picking your stocks that you would like, of companies that you would like to or would consider investing in. And the first way has to do with the way anybody who teaches investing will tell you this. And that is to pick what you know. Pick the services, pick the products that you use now to think about investing in them. So what am I talking about? Well, if you walk in my room and see my desk, you will see that I have a desktop Apple computer. I have a MacBook Air. I have a iPad. I have a iPhone.
The iPhones.
And so it would be natural for me to do what? Invest in Apple. And I do. I have. Mm-hmm. That is one of the stocks in my portfolio because I use their products. I use their services. So invest in them, buy their stock. You can kind of extend this by looking at your household. What is it you use in your household? What products do you use in your household? For instance, I cook. I don't like a lot of salt, but I do like a lot of spices in my food. So guess what? See this? This would be a company that I would consider investing in because I use their product. This is McCormick Spices. And I learned this from Nakia. When we started when she came on board as a team member, I would go up to Detroit and we would, put together our program. And she had a cabinet just full of McCormick Spices. And that's when I learned about McCormick Spices. And so since I use it all the time, that's what I would consider investing in. Another product, who doesn't have these?
Clorox.
Yep. Especially nowadays. Clorox is a company, they make the Clorox wipes, the bleach. Consider putting that on your list of companies that you might want to invest in. And so start there with your household products. And then you can expand. When I say expand, look at what you do at work. What products do you use at work? What services that you use? When I was working in the hospital, there were all kinds of monitors that we use. The drugs, who makes the drugs? They had the beds, who made the beds? So start looking at the products and the services that you use at work. And then you can look at the hobbies. What do you do for your hobbies? So I run, well, not now. I had to back that up to walking now. I can't run anymore, but I will walk. So the shoes that I like, I wear Nike shoes. So, that may be a product that may be a company that I want to invest in. And not only that, when you do this, ladies, involve your family. If you have children, involve your children in this. Grandchildren, let them talk about companies that they would like to invest in. Point these things out and let them know, look, these are companies that you can own too. Because the younger they start with all of this knowledge about investing, you set them on a path to succeed financially. So with that aspect, that's how I would tell you to at least start to pick stocks. Now, I didn't say buy. I said pick them and start making a watch list. This is what we call a general watch list, which is companies that you would like to buy. There is a step that you have to take before taking that company from a watch list to your portfolio. And that process is analyzing that stock. But you can still build your watch list. And as you continue to build your watch list, at the same time, you're going to start eliminating companies that you may not really be that too keen about. So you're going to take that generalized watch list that you make and narrow it down to be more specific to companies that you would like to analyze. And if they fit your analysis, then you will, transfer them to, these are companies that I want to buy and put into my brokerage account. Okay. Awesome. Any questions about that? It's not that hard. I think we make it a lot harder than what it really is. It's actually quite easy to start developing at least your first watch list. I can't see any questions. So are there any questions, Nakia, that are coming up?
Yeah, that's it. Yeah. But we would love to hear about these other stocks.
Okay. So as I stated before, that is the first way that I would tell you to start to pick your stocks you'd like to own. The second way is also a very easy way, and that is to look at the companies that are in the stock market indexes. Yeah. So there are many indexes, but the major ones I want you to look at include the Dow Jones, Industrial, which is 30 stocks.
Mhm.
They are the what they call the large blue chip stocks. So these are the stocks that are very stable companies. They've been around for a long time, and I think we have yeah. This is a slide of some of the companies that are in the Dow, and as you can see, you are really all familiar with these companies: the Microsofts, Verizon, Coca-Cola, P&G. You will not go wrong with picking one of these stocks to choose to invest in. And so you can start there with your Dow 30 stocks. The other index that you can start looking at are companies that are in the other index, which is called the S&P 500 or the Standard & Poor's 500. And we're not going to put 500 companies on this, slide. But what we can do is
The top.
the top 10 companies in the S&P 500 are on the slide here. And as you can see, Microsoft, Apple, Amazon, Alphabet, Tesla just joined as of December. You got Visa, Visa, Walmart, and Johnson. So just because you are on these in the index doesn't mean you will stay there. They do drop companies and add companies too. Like I said, Tesla was added in December. With the Dow Jones, in August, they dropped 3 companies. ExxonMobil is no longer in the Dow. Raytheon and Pfizer are not there. But when they drop those companies, they will add 3 other companies. So in the Dow, they added Salesforce, Honeywell, and Amgen. So you can start with these. Start looking at these companies. And if you are a person that says, I really don't like big companies, I want to look at smaller companies, you can look at another index. And that index is called the Russell 2000. They are smaller companies. They may not be companies that you are familiar with, but this is a slide of 25 of the top 10 holdings in the Russell 2000. So if you look at these companies, you may not be too familiar with them. I've heard of the stamps.com, Teladoc. You might have heard of Teladoc. Plug Power, which is a company that is associated with the electric cars, Overstock.
Yeah.
And Novavax, of course, is another drug company that's coming out with its own vaccine to fight coronavirus. So these are the top 25 companies in the Russell 2000, which are small companies. So those are 2 different ways you can start with picking your stocks, either with companies that you already are familiar with, whose products you use, whose services you use, or you can go straight to the stock market index, look at those companies and choose stocks from that. It's a way to get started.
So we got quite a few questions.
Okay.
These are some good ones.
Now that the stimulus checks are coming out, should we invest 40 to 50% of it? 40 to 50% is a lot. I mean, I would take into consideration what other uses can you use for that check? But I would definitely say that I would put some of that money into investing in some stocks. That is a very good idea. It's just a matter of choosing what companies you want, choosing your brokerage account, which is something we talked about couple of sessions ago. Getting your account and then putting some of that money into the account and buying some stocks. Yes.
Definitely.
So Nancy also asked, should we invest only in high yield index fund? Well, that's a choice. That's a choice. And that depends on how you feel about investing in individual stocks, which has its risks, versus an index fund, which also has its risk, but that risk is more spread out because, of course, you are investing in more than one stock. Mm-hmm. How long do you watch these stocks? Oh, well, Juliet, when I talk about watching a stock, when I put it on my watch list, that is a stock that I'm going to do an analysis first. And analyzing a stock does not take that long. But if they fit the criteria of how I'm analyzing, and they actually said they're growing, they're profitable, their value is good. When I talk about that, I'm saying that they're fairly valued, the price is right. Then I say, this is a stock I want to purchase. If one of those fall out of line, especially if they're not at the right price that I think that I should buy them, I'll keep them on the watch list until I say I will buy the stock, but only when it comes down to this price.
Oh, that's a good one. Does that add that? Because this was a good question too. When is the right time to buy?
The right time to buy is when they fit
the price.
How you analyze that stock. Yeah. And when you analyze a stock, it may not be perfect, but the majority of the features of the criteria that you're looking for, they should fit that criteria. And I would share with you what I am learning now is that when I look at a stock, I want to buy that stock if it is fairly valued, which means it's at a fair price. It is not an expensive price. So I will wait now instead of saying, "Ooh, that's the stock I want. I'm going to buy it." Not just yet. Only if it is in my price range will I buy the stock. So that is one thing that I'm starting to keenly look at now instead of just buying because I want it.
Right. This is a good question.
On average, how much can we expect to gain, all considering how much is invested? Well, I can tell you this, is that CA Cutie? When we talk about how much can we anticipate gaining, I like to use the S&P 500 as a benchmark and the return that you get on that. And typically the annual return on the S&P 500 is about a 10% gain on your investment. Actually, I like to beat that. But you can use that as a benchmark, at least a 10% gain. Yeah, but if you are truly going to be investing and managing and watching what you invest in, you should be able to beat that 10%.
Awesome.
But use that as a benchmark. Okay.
She's got it.
Yeah.
This is a good question too. How about ETFs or ETFs with high dividends?
I do invest in some ETFs, but my preference, because I like to choose individual stocks, my choice is to look at individual stocks. And as I said before, if you're more comfortable with buying a basket of stocks instead of individual stocks, if you're not one that's going to be managing your portfolio, ETFs is a way to go.
Yeah, she says it's cool.
Catherine says, I'm new to investing in the stock market. How do you feel about using Robinhood and Acorns? My preference, and this is just my preference, is to use brokerage accounts like Fidelity and TD Ameritrade, because that's what I'm comfortable with. I know Robinhood is good and that they're responsible for bringing a lot of people into investing. But for me, it's important, if I have an issue, I like to be able to get on the phone and call somebody and say, I need some help, and that there's going to be someone on the other line that will be able to help me. So in other words, customer service is really important to me. And that's why I kind of stick with the
big
boss lady.
The boss lady.
The boss lady accounts.
My experience with Robinhood is you do need to have some knowledge of investing first. Robinhood seems to be a platform that's more so for traders than it is for long-term investors or investors, period, because an investor and a trader they do different things. But Robinhood seems to be more for that person that is interested in trading. Not that I don't think you can't have a stock portfolio within Robinhood, but I think you have to have a lot of knowledge or some knowledge about investing before you even start using Robinhood, because people use it more so to trade, if that makes sense. Yeah.
And the other thing is that what you just said, with accounts like TD Ameritrade and accounts like Fidelity, Charles Schwab, they offer a great deal of information for education. In fact, I just signed up for two webinars on TD Ameritrade that they're going to be talking about dividend stock companies. So I like that. I like that their education is key to that, to their brokerage accounts. I also like to be able to do research, and I can do that with TD Ameritrade. I can look up information about the stocks on Fidelity. I don't know how well that is offered on Robinhood or Acorns. So I can't.
Just enough for a trader. If you know the difference, where I've learned from Dr. Marsha the difference between a trader and an investor. So if you are, it gives you just enough information as a trader, not necessarily as a stock analyst, like an investor, someone that's really going to be looking at the information that you tell us is very important. We need to know how to analyze a company before you invest in it. So it's totally different. But yes, you're right. The customer service, it's more so digital, it's more email if they answer, your emails. And then it's not really all that well for investors. It's really a platform I believe is best for traders. Those that are learning or already have been trading. So someone asked a really, really good question. Nancy asked good questions.
We should match the stocks that the S&P when we buy stocks, if we're buying. It's a good place to start. Yes, because you know that these companies, most of these companies have been around for a long time. They're pretty stable companies, and some of them are still growing, and so they're good companies to invest in. Do you manage your stocks daily, or okay, Jay? Yes, I do.
Which one though, Marsha?
I am one who looks at my portfolio quite regularly, in fact, I look at it daily because I'm not only an investor, but I also trade. And so since I'm trading, I'm also looking at the stocks that I have also in my long-term portfolio. And so I do look at my stocks daily. It's not for everyone to do that. It's just what I like to do it that way.
Daily.
Yeah. Mm-hmm. Yeah.
I'm daily, depending on what's going on
Mm-hmm.
in the news, or maybe weekly, but
Mm-hmm.
I'm not a monthly person. I invest monthly, but
Yeah.
I make sure that funds are in my brokerage's accounts.
Mm-hmm. Now that's a
Monthly,
good
but
point that you just brought up. When we talk about starting to invest and to invest regularly, one of the things that I do tell my clients that consistency is one of the keys to becoming a successful investor. And when I say consistency, one of the things you want to do is you want to be able to fund your brokerage account on a monthly basis. So if you decide that, okay, I'm going to start investing and I'm going to put money away in my account on a monthly basis, then figure out how much you can afford to consistently put money into your account. So if you're doing your budget and you find out you have, let's say, $100 left over, you can say, okay, so $50 a month is going to go into my account every month. So when I do decide to buy some stock, money is already in my account in order to do that. I don't have to go around, taking money out of the savings, putting it into the investing account. No, make this a habit because you want investing to be a habit. You want this to be a long-term habit. And so one of the best ways to do that is to always have money in your account in order to buy stocks or ETFs or whatever you want to invest in. What about just investing only in Fidelity stocks that they offer only and just contribute? Investing in Fidelity stocks. So are you talking about in ETFs or mutual funds? If Nancy, if that's what you're talking about, you can certainly do that and have just Fidelity funds that you invest in. That's also acceptable. Mm-hmm.
yeah. Good question.
Should one avoid Forex trading because of the risk? CA Cutie, I know some people that are very successful in Forex trading. It is a skill set.
Mm-hmm.
It is something that you have to learn how to do. So I it's just one aspect of investing.
Yeah, and trading. Yeah, investing in trading.
Mm-hmm.
It has risk, just like investing in trading. Everything has risk.
Yes. Investing in the stock market is risky, period, because you can lose money. What sources do you use to analyze your stock? I use Morningstar. I use Yahoo Finance. I also look at the individual's information from the company's 10Q quarterly reports, their annual reports. But my main resources are Morningstar, Yahoo Finance. I also like to look at, and I would tell anyone who is really interested in any beginner or anyone, is to start looking at Investopedia. Investopedia is an excellent resource to learn basic definitions of investing. So I would definitely recommend that. Mm-hmm. Investopedia. And it's online. Mm-hmm. Can I speak a little about setups as methods for analyzing potential stocks? A friend said, don't buy stocks, you buy setups. Catherine, I don't know what setups are. But when I teach about analyzing the stock, the things I'm looking at a company's financial statements, looking at the revenues, I'm looking at earnings, I'm looking at the information about the value of the stock, so PE ratios. I'm looking at, of course, Now that I'm doing dividend growth stocks, I'm looking at dividends and dividend yields, the payout ratios. So those are just to name a few when it comes to analyzing stocks. Some of the criteria that I'm looking at. And you can buy individual stocks.
Good ones. We have some who give you a thumbs up on the answers. Thumbs up on the answers. We would love if you guys give this video a thumbs up so people need to share this.
Yeah, and these are some of the things that as a coach and a teacher of investing, these are the things that we learn in our investment club. Even though we meet once a month, we are in contact with each other, asking each other's questions or answering questions. And so one of the advantages of being in an investment club is that we learn together. Mm-hmm. And we also have we learn from the program that Nakia and I have helped to develop. And that is the Stock Starter course, and information about how the market works, how to choose stocks, how to pick the type of portfolio, how to analyze a stock, how to buy a stock, how to sell a stock. We cover all of this information in our Stock Starter course. And we also talk about this information in our investment club, because the goal overall for people that are in our club is to learn how to manage, how to build your portfolio and how to manage your own portfolio, because this is something that, believe it or not, you can do on your own. But it's nice to do it in a group, but it's something that can be done.
It can be done.
We can learn to build our own portfolios.
This is a good question.
And you recommend a platform that allows virtual or fake trading, something you would trade with monopoly money. Yeah, TD Ameritrade. They have Thinkorswim. You can trade on Sim. It's called a simulator, and you can learn how to trade on that. Fidelity also has a simulator, and you're allowed to trade on that. But yeah, check your platform for. It's just called a Sim, SIM.
SIM.
And then when you get good at that, then you can switch over to trading live money.
Thanks.
Go back and forth.
So this is Stephanie. Hi, Stephanie.
Hi, Stephanie. Stephanie,
glad you're watching.
Yeah, Stephanie's one of our students. She's gone through the Stock Starter course, and she's also in our investment club. She's come a long way.
She's gotten it there. Nancy asked really good questions.
Okay, let's see. I got an email about voting. So does that mean I'm on the board with that company? Oh, no. If you own, if you are a shareholder, you are allowed to vote on different policies. Not policies. What do they call them? I forget what they call them. But no, you are not on the board. The board is elected by the shareholders if they want them to stay on the board. So no, you're not on the board. It's usually composed of 12, maybe to 15 people that actually direct the company. So you're a shareholder. Mm-hmm. Any insight on penny stock investing? Catherine! Catherine, we did penny stock investing 2 weeks ago.
I wonder, did we do something on penny stock?
Yeah, we did. Let's see, it was on the 3rd, and it's on the YouTube channel. So you can go to the YouTube channel and we talk about investing in penny stocks.
That's the actual title, is investing in penny stocks.
Is it the pros and cons, or was it the pros and cons of investing in penny stocks? So we got you covered already. Any other questions about investing in picking your stocks? How do I join the investment? Is there a monthly fee? Hi, Kim. Yes. The investment club, there is a monthly fee associated with the investment club. It is $97 a month. As long as you are a member, it's $97. And what we do in the investment club, because we are helping one another build our portfolios, it's 2 hours. We usually stay on for 2 hours. It's on the second Thursday of each month, and we have an agenda. The first hour, we individually talk about our portfolios and the companies that are in our portfolios and how we can continue to grow those companies, how we can accumulate more shares in the companies. And the second hour, we talk about analyzing stocks. We actually analyze stocks during the second hour. And then when we analyze a company and it fits our criteria, we're actually building a watch list, a bookworm watch list. So if the company fits the criteria, they go on our watch list. And as a member, you have access to the watch list. So you can determine, that's another way to, to actually help to build your own portfolio. Because if they don't fit our criteria, we vote. And we'll vote to either yay or nay.
You guys can visit the website for the Stock Starter course, as well as the membership, the coaching that she does every second Thursday of the month. Yeah, we've got some more thumbs up, some thank yous. One says, Catherine, just how
and you know what?
Looking at it.
Yeah, and ladies, if you have any other topics that you'd like for us to cover, like on a Wednesday night, put it in the chat, and I will definitely go through and do some research, come back and present, because it's all about learning how to invest.
We got time for it.
That's what we want to do. How do we maximize our
portfolio? Doing it again.
Hi, Nancy.
She's doing it again.
If you're getting close to retirement. Well, one of the things you can do, it really depends on what you're investing in. Most of the experts will tell you, as you get closer to retirement, you want to start looking at stocks maybe that are not as risky to invest in. When you look at it overall, they'll tell you to, switch to going into bonds versus stocks. But personally, I like to stick with stocks because, I'm sitting here managing it. So less risk is involved the closer you get to retirement. If you're going to do stocks, you might want to look at stocks that will give you dividends, because that's going to give you a consistent stream of income, especially if you are looking at dividend growth stocks. Because the dividend growth stocks are the ones that are going to increase their dividends to you every year. And the other thing, if you're not in need of the dividends, reinvest the dividends either back into the stocks or back into the portfolio. What is the best investment for someone in their 50s? Well, that depends on your risk tolerance. I mean, how much risk do you want to take? As I keep saying before, for me, it's stocks now, It's more dividend growth stocks more than the technology stocks. Yeah.
Is there some more thumbs up going on?
I must say that technology stock was good to me last year, but now you see that people are, the technology stocks are kind of going on the downtrend, and people are starting to rotate out of technology into other sectors of the market. Mm-hmm. So, even though tech is here to stay, when you see the prices starting to go down, and maybe enough now is a good time to start looking at other companies other than technology companies.
Do you consider technology stocks to be risky?
Oh yeah.
So that's a good question. Why aren't they?
Well, for one thing, especially when you look at the technology stocks that are coming up now, some of them are smaller companies that are, just getting their feet wet and on the ground and starting to come up. And so just technology in general, especially the small technology companies, there's really no guarantee that they're going to be successful. I mean, when you look at the bigger technology companies, even, sometimes they will be either taken over by other technology companies. So even though technology is here to stay, they're still kind of risky, especially the smaller technology companies. Mm-hmm.
That's our last one.
I already have a watch list, but I'm stuck on the analysis. For example, I'm watching all of the air carriers. Oh, the airlines, because I think they will eventually rebound. I'm not sure if I should pick one or spread the risk. Yeah, well, with the airline companies, of course, they took a dive. They are now starting to come back a little at a time. And as we get this pandemic under control, of course, they're going to start their prices are going to start going back up because the economy is going to go back up. More people are going to be traveling. More people are going to be flying. And so the best time to get into a company, of course, when you have a lower stock price, so that when things open up again, the stock prices are going to rise, and then, you're going to be making some money. And not only with stock, that's any type of entertainment going on now with the movie theaters and cruise lines. So, yeah. What are the benefits of opening up a taxable account and or Roth IRA? Okay, Ramona, that's something I would tell you to talk with your tax person about. Yeah, I'm not really comfortable with, talking about that. I'm more comfortable with investing in stocks. That's my expertise. Ooh, I lost you. Okay.
Sorry. So you're trying to bring some light back into my room, into my face.
Yeah.
But yeah, those were some good questions. Ramona, Nancy asked
Nancy is on
quite a few. Jay asked some really good ones. Catherine, also, even though she's saying she just found us, so welcome.
Welcome aboard.
Glad you found us.
Yeah. I really hope that what we're doing is helpful, and it's encouraging you, if you have not started to invest, to think about investing in individual stocks and building your stock portfolio. So I hope this has all been helpful to you. We'll still continue to do it as long as the demand is out there.
Mm-hmm.
I'm going to do this because this is something I enjoy doing it. I've been doing it for a long time. I take care of my own portfolios. I manage them, and they've been doing quite well.
Mine as well. Thank you. Thank you for
Okay.
teach us. So.
My pleasure. And if you have anything else you'd like us to talk about, or you want me to talk about next Wednesday, just you can drop it in the chat, or either you can go to the Facebook business page and say, this is a topic I like to cover on the next Wednesday night investor chat, and I'll be happy to speak with you about it.
Awesome.
All right.
Awesome, guys. Well, I guess that's it. Check us out at bookworminvestmentclub.com, and we will see you guys next Wednesday for another investor chat.
Yes.
Bye, everyone.
Bye-bye.